Archer Aviation is a leading urban air mobility company whose goal is to commercialize electric vertical takeoff and landing, or eVTOL, aircrafts. It's in the process of going public on the New York Stock Exchange via a SPAC business combination with Atlas Crest Investment Corp., ticker ACIC. The business combination is expected to be completed in the second quarter of this year, and the ticker is expected to change to ACHR. This is a SPAC that many of us on the Discord have been talking about, and a SPAC that Cathie Wood's ARKQ ETF has invested in. Full disclosure, I do have a position in Atlas Crest. In this video, I'm first going to give a high-level overview of Archer Aviation. Second, I'm going to go over my bull case for the stock. Third, I'm going to go over my bear case. Fourth, I'm going to go over my game plan for the common stock and the warrants. All this right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, let's get right into it. What is Archer Aviation? Archer's goal is to make eVTOL aircrafts to transport people via aerial ride sharing, much like an Uber or Lyft. But instead of a car, people would be flying in its aircraft at 150 miles per hour up to a distance of 60 miles. eVTOL stands for Electric Vertical Takeoff and Landing. Investors, get used to this term because you're going to be hearing a lot about it in the coming years. Much like a helicopter, there is no runway required for these aircrafts, and they can land vertically on a landing pad. The plan is to operate these eVTOLs within cities to help solve the problems around traffic congestion, sustainability, ground infrastructure, and public safety. Unlike helicopters, these eVTOLs are expected to be used several times a day via aerial ride sharing, driving down the cost and making them as affordable as hitching a ride in an UberX. Like many SPAC targets, Archer is very early stage. It is pre-revenue and doesn't have any commercial products. As you can see from their website, here is their three-part master plan. Build an aircraft to demonstrate the capabilities of electric VTOL, certify an aircraft that is just as safe as commercial airliners, launch commercial routes in cities, and integrate autonomous systems for safety. The next thing to know about Archer is that they have a $1 billion contract with United Airlines. At a basic level, United Airlines is ordering $1 billion of Archer's aircrafts with the option for an additional $500 million of aircrafts. And as of February 8th, 2021, when compared with Joby, Wisk, Lilium, Volocopter, and EHang, Archer is the only one that has any contracted book orders. And here is some additional information about the contract from United Airlines website. Under the terms of the agreement, United will contribute its expertise in airspace management to assist Archer with the development of battery-powered, short-haul aircraft. Once the aircraft are in operation and have met United's operating and business requirements, United, together with Mesa Airlines, would acquire a fleet of up to 200 of these electric aircrafts that would be operated by a partner and are expected to give customers a quick, economical, and low-carbon way to get to United's hub airports and commute in dense urban environments within the next 5 years. United is also one of the PIPE investors. At this time, it appears that Archer's future is completely dependent upon United Airlines, And there is a risk that United can cancel its contracts with Archer. So that is something to be aware of. So next, let's look at their leadership team. First, Archer was founded by Brett Adcock and Adam Goldstein. They were both co-founders of a company called Vettery. Second, Archer's chief engineer was previously chief engineer at Airbus Vahana. So that's definitely a plus for me to have a former chief of Airbus's eVTOL business on the team. Third, their VP of engineering and interim CFO both came from Wisk, which is a competing eVTOL company. Fourth, head of design comes from Mazda, and senior director of marketing comes from Tesla. And fifth, Eric Wright, head of certification, is a descendant of the Wright brothers. How cool is that? I mean, this doesn't have any impact on my investment thesis, but I just thought it was pretty cool that a descendant of the Wright brothers is on the team. Next, let's talk about two key investors. The first is Mark Lohr. For those of you who don't know Mark Lohr, he founded Jet.com, which he later sold to Walmart. As part of that deal, he ran Walmart's US e-commerce business from 2016 to 2021. In my opinion, he turned around Walmart's e-commerce business and is the only reason that Walmart was able to stay competitive with Amazon. Mark was also one of the first financial backers of Archer and has remained a trusted advisor. He's also investing $30 million into the PIPE. So to me, this is a huge deal to have the financial backing of a visionary such as Mark Lohr. The second big investment, as I mentioned earlier, is from Cathie Wood's ARKQ ETF. I also have incredible respect for the due diligence that Cathie Wood's team typically does before making an investment. Of course, I can't just rely on the ARK team's investment thesis in lieu of my own investment thesis. But it is nice when your own investment thesis is validated by Cathie Wood's team. Next, let's take a look at the financial projections. First, Morgan Stanley believes that the total addressable market for urban air mobility to be $1.5 to $3 trillion by 2040. Second, Archer doesn't expect any revenues until at least 2024. 2024 is when they expect to have their first urban air mobility networks launched in Miami and Los Angeles. Third, they're projecting revenues of $2.23 billion in 2026, to be EBITDA positive in 2025, and free cash flow positive in 2026. And you all know by now that I take these projections with a high amount of skepticism due to the extremely high-risk nature of this business. So now let's take a look at the transaction overview. At $10 per share, the implied pro forma market cap is $3.75 billion. They will have no debt and $1.037 billion in cash on the balance sheet. SPAC founder shares will own 3%. The public SPAC shares will own 13%. PIPE will own 16%. And existing Archer shareholders will own 67%. All right, so that was my high-level overview of Archer Aviation and the business combination. I didn't cover all of the investor presentation, so I encourage you to take a look at it, and I'll leave a link to the investor presentation in the video description. So what is my bull case for the stock? I believe this to be a very high-risk investment, but assuming Archer will actually be around in 5 years, I'm going to use the 2026 revenue projected in the investor presentation. That projected revenue is $2.23 billion. To give myself a margin of safety, I'm going to take off 25% to get $1.67 billion. Right now, there aren't any comparable companies since all of Archer's competitors such as Joby and Lilium are in the same pre-revenue stage. So I'm going to estimate that a high-growth company in a high-growth industry with few competitors should get a PS ratio of around 20. The PS ratio could probably be higher, but to give myself a margin of safety, I'm going to stick to 20. 20 times $1.67 billion equals a market cap of $33.4 billion. Divided by 375 million shares outstanding gives a stock price of $89.07. Friday's closing stock price was $10.68, and that would be a 5-year return of 734% in my bull case. So what is my bear case? As I keep saying, this is a very high risk investment in a company that's trying to achieve something that no one has ever achieved before. Not only do they have to get a working eVTOL, but it has to be safe, it has to scale at a reasonable cost, and it has to pass all federal regulations. This is no easy feat. So in my bear case, I'm going to say that they go bankrupt in 5 years. So what is my game plan? As I said earlier, I do have a position in the Atlas Crest SPAC via the warrants. And because I think that this is a very high risk play, I invested less than 1% of my entire portfolio into this play. Even though I think it's high risk, I do believe that if the industry succeeds, it will be a winner takes most situation. And I think that Archer will be one of those winners, especially with the strategic partnership that they have with United Airlines, who I think can help them get past all of the FAA hurdles. And I actually bought before Cathie Wood's team bought, as many of you know from the Discord. As cool as that may seem, my investment is still down at the moment, since most of my purchases were made in February, right before SPACs started crashing. So one thing I may do is average down, but I want to be very strategic about it. I don't want to just buy every single dip and try to catch a falling knife. The other thing I plan to do is just hold. According to the prospectus, the warrants won't even become exercisable until at least October of this year. So I should have plenty of time before I have to make a decision. Of course, with warrants, I always have to be alert and make sure I don't get caught up in an early expiration. And if you want to know more about SPAC warrants, be sure to check out my SPAC warrants Basics for Beginners video, where I answer a lot of questions that my viewers have asked me about warrants. And I am trading these warrants in my Fidelity All SPAC portfolio. And of course, if you're in my Patreon, you're going to be the first to know if and when I buy or sell these warrants. And if you want to know exactly what I'm trading in my Fidelity All SPAC portfolio, be sure to check out my Patreon. For just $5 a month, you get all of my buy and sell alerts from that portfolio. There's also access to my private Patreon Discord. The Patreon Discord channels are inside of the free public Discord server, but they are completely separate and private from the rest of the public Discord. If you want more than just my buy and sell alerts, then I also have a higher tier where I share all of my holdings from that portfolio and 2 of my other long-term portfolios every month. And if you want to become a super alpha OG and get a shout out on one of my videos every month, I also have a tier for that. So be sure to check out my Patreon if you're interested. A link is in the video description. And as always, a big thank you to the amazing patrons that have already joined. And I also have a free public Discord with over 500 members. It is the most awesome community, definitely my favorite place to talk about SPACs and other stocks. Be sure to check it out if you're interested. A link to the free public Discord is also in the video description. All right, so let me know what you think about Archer Aviation and what other SPACs you're watching. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.